All right, guys. So in today's video, I'm going to take you through my A+ macro model from start to finish, top-down analysis, starting from the 15-minute chart onto the 1-minute chart. I'm going to talk through two trades that I took in this price action here. One was a loser and one was a winner, but that's what the game's about, right? Not every trade will be a winner. And today we'll talk about why the trade lost, why the trade won, and how I'd take any of these trades again and again and again because I see these repeatable patterns. If you're new here, guys, my name's Ruben. I've been trading macros roughly for about 1.5 to 2 years. Overall, 2 years of trading with ICT. And this is my main model, my A+ model. Now let's just start on the 15-minute chart. Let's go back to replay roughly about this point here. Now, when I'm looking at price action, I'm looking for key signatures that could indicate reversals, could indicate, sudden aggressive price movement. That's what I'm looking for, and that's what I'd like to be involved in. Now, just looking at price, I don't really care too much about what's happened back here. Doesn't impact me. What I'm caring about, it's what's happened in the previous range, right? What's happened in the previous range. And the previous range for me is from this swing low here to this swing high. That's all I'm looking at, because if I'm scalping the macros, if I'm trying to get good at, where can price move in the next 30 minutes to 1 hour, I don't need to know what's back here. I don't need to use the 4 hour, the 1 hour, the daily. I just need to look at the 15-minute, get an overall direction, identify liquidity, sweeps of liquidity, and also imbalances. So firstly, I want to point out a few things here that are very crucial to how I trade and why I took these trades. I want you guys to point your attention to this candle right here. Now this candle, have a look at the bottom. Thursday, the 6th of March, 7:15. Now if you don't know already, between 7 o'clock to 12 o'clock New York time, that is what I class as the Asian session. So pretty much this box that I'm drawing here, that there is the Asian session. So any highs and lows in that session, they're always important to look at. Why are they important to look at? Because sometimes you get reactions after sweeping one of them, which is what we saw today. Now in this example here, you can see price accumulates all the way through Asian session. Accumulate up, down, up, down, up, down, up, down. And that's completely fine. If I see this, I'm looking for an abrupt manipulation move. And I'm looking for that move to sweep liquidity. In this case, we've got this sell side point right here. That's it. Very simple. We've come down, we've swept time-based liquidity. In this case, it's session liquidity from the Asian session. I just need to drop down now to a smaller time frame to make sure I can see the price signatures or reactions around the 1-minute chart. That's it, around the macro. So I can see we've accumulated, we've manipulated, we've swept that low. I tell people all the time, mark out accumulation pockets because these can be good draws on liquidity. So that is your accumulation in terms of the power of 3, which I'll mark out like this. Manipulation, how do you spot it? You're just looking for an abrupt move. So that's your accumulation there. Manipulation down, in this case, we manipulate to sweep time-based liquidity, which is fine. And then I'm looking to see if we have some distribution. There's a chance. It doesn't have to happen, but there's a chance. A lot of people, I think, get caught up in the idea that, just because we have accumulation manipulation that we have to distribute. It's not the case. You start on the higher time frame like this, you drop down to the smaller time frames, and you see if the smaller time frames correlate to what you're looking at. Now, at this point in time, I'll be honest, guys, at this section in time, I was hoping that when we swept the time-based liquidity right here, I was hoping that this price action did something like this. I was hoping we'd just do this, but we didn't. So in my Discord, I outlined this. Eyes on price now, guys. We've swept time-based liquidity, and I was looking for the macro. So again, the macro exists 10 minutes before and 10 minutes after every single hour. This here is that sweep of Asian sell side, which happens on that wick. Let me remove this for a second, and I'll mark out the macro with 2 vertical lines. So the macro again is between 1250 and 110. And just so you know, guys, you can trade any macro. This macro is not in the typical London Open session. It's also not in the typical Asian session, 7 till 12. So you can trade any macro as long as price and then time are aligned. That's completely fine. So you can see all this accumulation that becomes the draw. Really nice low resistance, relative equal highs. We also have all these highs up here. To me, the draw is very clear. It's really important. Now, when I'm looking at this macro, I'm looking for impulse. I'm looking for things to be inverted. So if I just play this out again, you can see price now inverts this fair value gap here, which provides me with an entry. It's as simple as that. But you might be asking, well, what else? What else is there? Well, if we just go across to the side here, I want you guys to have a look at this. right? Have a look over the side here in price action. Now, I want you guys to have a look where my cursor is, and I'm going to zoom in a little bit so you guys can see. You've got a fair value gap right here. And I'm watching previous fair value gaps to see how they react or how price reacts. And we can see exactly at this point that in this fair value gap, price expanded dramatically. You can see that, right? We tapped into this gap before. The previous day, we expanded dramatically. So if we tap into that gap again and it fits my narrative, there is always a chance, because the market moves on patterns, right? There's always a chance that the same thing happens again. So for me, we tapped into that fair value gap. We'd swept Asian sell side. We'd also swept this internal low right here. We had that inversion gap and I was aiming for long. So put simply, I took a long position from here. The stop went below here. I think below the wick of this candle. And I was going to take some partials here and then hold to the highs. Did this trade work out though? It didn't, right? We came up and then ultimately we mucked around and we stopped out. Now at this point, a lot of people are thinking my strategy doesn't work, or you might be taking a loss and you think, well, I'm done. I can't trade anymore. In my opinion, always allow yourself to have 2 trades. That's what I give myself every single day. If I lose the second trade, then I'll move on to a separate account or I'll stop trading. It's as simple as that. So this trade was a loser, but I'd take that trade any other day. And you might say, well, Ruben, wait a sec. You entered outside of the macro. Plus 5 minutes, minus 5 minutes is completely fine. So that's the macro there. The macro did the important thing. Entry comes here, 114, happy days. Now, just because we come down here does not mean that I'm going to switch my bias and say we're going short. There's no way I'm going short here. Why am I not going short? Because we're so low down in the range. We've accumulated all down here. We've pushed down. We're in this fair value gap. We're so low down in the range. I'm not going to short. I don't chase price. That's not my model. My model is looking for a continuation or looking for reversals around the macro timeframes. Simple as that. And I need to have liquidity to target. So when price is just spooling in one direction, I don't buy fair value gaps. I'll wait for price, be patient, and wait for my model to appear. So this is my A+ model, using macros, using fair value gaps, using inversions, targeting that low resistance. You might say, well, what's the second trade you took, and why did you take the second trade? Well, at this point, keep in mind, there's a macro that's approaching like very soon. And now we've come down, we've swept this low. Now, for some people, you're going to say, well, why didn't you just make your stop loss lower? Because I didn't want this low to be swept. I, ideally wanted price to push up here and then expand higher. But did price do that originally? No, it did not. So as price comes here, I'm asking myself, okay, I need to see something inverted. I need to see impulse. I'm waiting for impulse. That's really important. Impulse will get rid of a lot of your problems in trading. Impulse, impulsive candles. How do we close? What's coming up, right? Now, you can see here at this point, we've come down, we've swept this low. We're in the bottom portion of this fair value gap. Price is either going to react from this point or it's not. It's something that I like to call this. If not now, then when? If not now, then when? Because if it doesn't react now, then when will it react? This is the last fair value gap that I'm interested in. We're in the next macro here. There's nothing else I want price to react from. So I'm going to take another trade if I get something inverse. And we do get an inverse volume imbalance just up here, right there. So my entry comes from this candle, and I'll get the executions up after this video at the end. My execution comes from this candle, and then look at what the 2 o'clock candle does. 2 o'clock, 3 o'clock, 4 o'clock, 10 o'clock, 9 o'clock. The hourly candles can induce volatility, and this is what I was playing on in this idea. So in this case, I was using an inverse, volume imbalance. In this case, an inverse fair value gap. I'm using what the market offers me. I have some flexibility in my model. The draw on liquidity is completely clear. And my first partial comes from this sell side imbalance up here. It's a very small one, but why that sell side imbalance? Because we have liquidity resting below and it's in a level of premium from this high to this low. Quite simple, quite easy, repetitive. Entry from here, stop loss below the bodies. Again, partial up here, right? So let that play out. It was very quick, right? Very quick to the partial. And then as price started to work up, I tried my stop. And I believe in a couple candles time, I think I was stopped out roughly here. So took a partial here, full TP here. I was aiming for these highs, but being NFP, I'm happy to take anything from the market. And it's as simple as that, guys. So if I get out of this replay mode now, and we go back to the chart at the same time frame, I'll get on the execution so you guys can see exactly where I entered, where I exited, and you'll see this process. It's a repeatable pattern. I'm using macros. I'm using, the higher time frame briefly, the lower time frame, targeting liquidity and giving myself multiple opportunities. This is my A+ model. This is what I teach the Discord. This is what I've collected data on for the last year and a half, 2 years. And I'll continue to use this because it works in every single session, any single day, whenever you'd like to trade. So keep it posted, guys. I'll put these executions on the chart now and then we can talk through that. So here we are, right? First trade was a loser. You can see I was stopped out on this candle. Second trade I've entered here, partial here, and then we've stopped out on this candle here. And that's it. I don't need to hold. I don't need to hold for the top of these highs. Did we come and sweep them? Yes, but do I really want to be in the trade? Do I really want to be in the trade for 2 hours? No, because macros for me are all about quick trades. If the price wants to spool, it can spool, but I'm happy to take that quick move. And to be honest, that was probably the quickest, the fastest, and the best move for the Silver Bullet and London Open session. Very quick, very abrupt, and follows all my rules. Hope you guys got something from this video. If you like these types of videos, trade recaps, or even daily reviews, feel free to leave me a comment below. But this is repeatable, guys. Study this. Hope everyone has a fantastic weekend. We'll talk very soon. Peace out.